Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Europe sidelined from the start as the U.S. and Russia teams meet in Saudi Arabia on Ukraine. The cost of European defense nudges yields higher. In the U.S., bonds reflect on Governor Waller's call for a pause. And in China, an embrace of the tech titans, President Xi vows support for the private sector, extending the rally. Good morning, Manus.
Danny, good morning. We come back from a long weekend here, and we are risk on. We're up a third of 1%. Stocks just shy of that all-time high. It is almost cautious about it. Bank of America have a new survey out. Investors want to take global risk, the highest proclivity for risk in 15 years. And that's despite those retail sales coming in soft on Friday. Roll it over, have a look at the bond market. Those retail sales were the weakest in 2 years. That gave a little bit of a push lower in yields. But we're 451 at the moment. I can tell you this, yields up until today, I mean, we're irked a little bit by what's going on with the price of defending Europe against Ukraine, and that's what you're seeing in the bond market there. But you're seeing this bond market rally for 5 weeks in a row. That's the longest fall in yields since 2021. Irked right for now.
Yeah, fair enough. We also have some individual stocks we are keeping an eye on, too.
We have indeed some individual names. Baidu falling in the pre-market after reporting a smaller than expected revenue drop. It's facing challenges in the internet search and competition from startups like, you got it, DeepSeek.
Also, Intel shares soaring, which, by the way, were soaring last week, too. But this time it's thanks to the Wall Street Journal. Shares up 5% in the pre-market, reporting over the weekend that Broadcom has started informal talks about making a bid for Intel's chip design and marketing business.
And Southwest Airlines will cut over 1,700 jobs in the leadership ranks. It's a dramatic step to reduce the expenses and mark the first layoffs in the carrier's history. And in just a few moments, we speak to Sonja Marten at DZ Bank. And later this hour, Kennon of Clear Harbor Asset Management joins us. But Danny, the cost of defending Europe, it's top of the agenda in the bond market, in the euro, it's pervasive.
It makes sense. The idea that if you're going to spend more on defense, you're going to need to borrow more for these European nations. You even had one Euro official floating the idea to Bloomberg of joint bond issuance from Europe. This is something the Draghi report called from. It's this irony that the thing that may be finally pushing Europe together is the pressure from the U.S. And European stocks managed yesterday closing the day at another all-time high.
You then just look at the ghosts of the past, and this is why the bond market is perhaps a little bit irked. This is about the European stability mechanism. This is about coming together for the cost of defense. Bloomberg have run the numbers. They reckon it's around $3 trillion in terms of what you're going to need over the next 10 years if you're really going to build a conscious defense of Europe against the borders of Ukraine and Russia.
Which just shows, again, big picture, that this is a market that's trading on the political economy, that's trading on JD Vance's speech, which shocked a lot of Europeans for some reason, trading on these meetings between the U.S. and Russia. And by the way, 9 p.m. Eastern tonight, there's going to be a Fox News interview with Trump and Elon Musk, another one that could potentially move the market.
Yeah, and we'll certainly talk about that in terms of the movement on Doge. We saw that last press conference last week really pushed the narrative here. But if you look at the reaction in the bond market, the euro dollar, and along with the dollar, let's just take a look at those, because again, this plays to the whole theme, Danny, that we've been talking about, which is the cost of defense, the $3 trillion potentially. The euro had rallied 1% this month into the last couple of days. Hedge funds, they've actually upped their shorts by the most since 2024. Something's irking the market. Sonja Marten is the head of FX and monetary policy at DZ Bank. Sonja, good morning to you. Global reaction to the Munich Security Conference was pretty amazing in certain corners. You look at the speed with which we're moving in Saudi Arabia today. The rates market is spooked. What's the reverberation for the FX world?
Well, as you could see this morning, there's actually, since yesterday, there hasn't been a huge reaction in the market on the FX side, certainly. And I think that's because maybe people don't quite know what to make of this. Obviously, as you've just mentioned, I mean, the speech by JD Vance caused a lot of raised eyebrows this side of the Atlantic. A lot of people very surprised, although I'm not quite sure why, because, you know, obviously this is the stance the Trump government has been supporting for a while. But what it does mean, as you said, is high defense spending for Europe. That's spooked the bond market. It hasn't really helped the euro or put pressure on the euro either way. I think in terms of euro dollar, it's relevant maybe in an economic sense if we were to start spending lots of money in defense. That would increase our debt, but it would also maybe give an economic boost. So it's a bit of a two-sided coin for euro dollar here. So the market is pretty undecided, I would say, at this point.
Sonja, what and how should we price in this idea that when it comes to defense spending, Europe is on its own, that America is less of a reliable partner in that regard, which, as you point, shouldn't really come to a surprise considering everything we've already heard from the Trump administration. But is this a shift that should somehow be reflected in financial markets?
Yeah, I mean, it is a significant shift. And yes, in a sense, I think, especially when you look at the bond market, it's going to be an issue because it's going to sort of give us a new direction in terms of spending and how much debt we're going to have. I mean, obviously, as you know, we have a big German election coming up this weekend. One of the contentious issues is the way that we deal with our debt. Should we increase it? Should we not? I mean, so this is all going to be something that filters through, definitely through the fixed income market. I think also for the equity market, it is very relevant. For the FX market, we sort of come next in line, if you will. I think the FX market will ultimately have to deal with how that impacts inflation, monetary policy, and growth. And that's where we get the effect. And that's going to be a longer-term issue, I think.
The one bogeyman, so to speak, or the erraticism of tariffs, they're on, they're off. It can be within hours. They can be backtracked in a number of days. But you are more and more convinced that this is bully tactics and that Trump will not ultimately pull out the big guns. Why do you feel kind of assured about that?
Well, actually, to be honest, the last few weeks, I mean, have been such a roller coaster ride. He's announced tariffs, he's taken them back, he's pushed them down the road. No one really knows what's going to happen. And I think, to be honest, I'm not sure if he does. So obviously, the tactic is to bully people into submission, to bully the trading partners into submission. That's going to work to some extent. I do think down the line we will get tariffs. I think, actually, to be honest, the market right now is maybe underestimating that risk. But I think it'll, obviously it's not something that's going to happen immediately. He's going to wait. He's going to try to make deals. That's his thing. He's the deal maker. And it's kind of thrown the FX market into this big loop of uncertainty because I think in a way it would have been easier for the market had he actually pushed through with a 25% tariffs on Mexico and Canada, because then we would have been sure that if he says something that it's going to happen. And as we stand now, we just never know. So it's sort of wait and see. But I think ultimately down the road, there will be higher tariffs. And whether they'll be reciprocal or 10% on everything, well, we'll have to kind of just wait and see, I think, how that plays out.
Well, when it comes to Fed policymakers, we learned at the end of last year that some number, we don't know what number or who, were incorporating that into their outlook. We know for certain that Governor Chris Waller was not one of them. Speaking over the weekend, this is one of the things he said, Sonja, that waiting for economic uncertainty to dissipate is a recipe for policy paralysis. Greg Dacko of EY calling it confusing and data-centric. What do you make of that tactic from Waller? We can argue that there's politics behind it, what have you, Sonja, but this idea you can't yet price in something like a tariffs. You can't price in that uncertainty because it will lead to paralysis by central banks.
Yes, I mean, they're caught between a rock and a hard place, to be honest, because if you think about the impact of tariffs, contrary to what Trump is promising the American people, they will lead to higher inflation. Equally, his policies might also lead to low growth. So what does the Fed look at? Does it look at a slowing or weakening labor market, which would justify more rate cuts? Does it look at the inflation, which may justify less rate cuts? And then also there's the issue that tariffs are kind of a one-off effect on the price level, and that as far as the inflation rate is concerned, they'll disappear after 1 year. So it is an impossible situation for the Fed. And I think, to be honest, all that they can reasonably do at this point in time is to remain very much independent politically. That's important. And to move from one meeting to the next, to move from one data point to the next, and to be honest, to move from one presidential decree to the next. That's all they can do. They should not pre-commit themselves to one choice or the other at this particular point, because I think that is the biggest danger that they can run into.
Sonja, we're constantly monitoring what's going on with the flow and the positioning. I started the show talking about the hedge funds taking their position against the euro more recently. But when I look at some of the bigger flow, look at the flow of money into Europe, so underpriced on the equity side, so underpriced on the asset side. Can that in any way create perhaps a floor to the euro, that flow into the underloved asset side on the global allocation?
Well, I mean, that's a major problem that Europe has had for some time. I mean, obviously, when we look at where the euro stands in the sort of global structure of FX markets, the idea, I think, initially for the euro to really rival the US dollar, and hasn't quite worked out this way. I mean, when we look at central banks and the way that they hold their reserves, still a lion's share, still in US dollars. 25%, 20 to 25 in euro, and they have diversified in recent years, but not so much into the euro, but in other currencies. So I think there is a flaw there. And I think the idea that people might turn against the US Treasury market, which just keeps coming up again and again, is also flawed because of this, because, where are people going to go, really? And I think that what we have seen is that Europe is only attractive to a certain extent. We have so many issues to deal with here. The fact that we are very fractured, that we are having a hard time, I think, presenting a united front vis-a-vis the US right now. We have a war going on, very close to our border. So all of this makes Europe unattractive in certain ways for investors, and that's going to be a problem longer term as well.
I guess there's one alternative to bonds, and it is gold, which has done very well. Sonja, unfortunately, we're going to have to leave it there. That could be another hour-long conversation. Sonja Marten of DZ Bank, thanks so much for joining us this morning. Let's now get you some other top stories that are trending on the terminal this morning. Elon Musk's startup xAI unveiling its updated Grok 3 model. Musk claimed that the model outperformed its rivals and has more than 10 times the compute power of its predecessor. xAI also introduced a new smart search engine with Grok 3, calling it Deep Search.
BHP's profit has fallen 23% due to decreased demand for iron ore from China's faltering economy. It has cut its dividend to 50 cents a share, and that's an 8-year low. The CEO, Mike Henry, remains optimistic, citing early signs of recovery in China and a resilient economic performance here in the United States.
And New York Governor Kathy Hochul is raising serious questions about the future of Mayor Eric Adams. 4 top deputies have resigned, and the Speaker of the City Council has called for him to step down. Hochul has called for a meeting with key leaders to discuss a path forward.
Coming up, Ukraine begin talks, I should say, begin in Riyadh between Russia and the US without Europe nor Ukraine. More on the story.
Welcome back to your Bloomberg Brief. Danny Berger and Manus Cranny here in New York. Meetings have begun between top U.S. and Russian officials in Saudi Arabia to discuss ending the war in Ukraine. Last week, President Trump held a landmark call with Vladimir Putin, with a summit between the two possible as soon as next week. Ukraine's president, for his part, said he won't accept any negotiations without Ukrainian involvement. Joining us now is Bloomberg columnist Mark Champion, who covers international affairs. Mark, we have a meeting without the Europeans, without the Ukrainians, a meeting about meetings to come for the future for talks. What is hoped to accomplish in Riyadh right now?
Well, I mean, the Americans clearly know what they want to do. We really don't, and nor do the Ukrainians, nor do the Europeans know fully what it is that they aim to get out of this, what their parameters are, what they're willing to accept, what kind of red lines they have. And it's obviously making the Ukrainians especially extremely nervous. And President Zelensky has, changed his approach, which had been quite optimistic, and now he's becoming, really quite determined in explaining that he can't accept any kind of deal that the U.S. makes over his head. And the Europeans also, they just had an emergency meeting, wasn't very successful, but also very nervous about what's going on inside that room, and they have no direct visibility.
Mark, good morning. How do they reassert themselves, but more importantly, reinsert themselves with substance into these negotiations? Because they were quite fractured yesterday in terms of boots on the ground, but maybe a coalition of the willing around money.
Well, that's exactly the problem. I mean, I think the Europeans understand that if they are going to get onto this train, they're going to have to come up with a plan of action. The Americans have, one thing that they've been quite clear on is that they do not want to carry either the financial burden or the military responsibility that will come after a settlement, either in terms of security guarantees for Ukraine, any kind of peacekeeping force, or the reconstruction. President Trump has only talked about getting recompense from the amount of money that the Americans have already spent in helping Ukraine. He hasn't been talking about giving them more. And so, the Europeans really understand that they have to come up with a plan, but they are constrained, by, their kind of internal fractures, which always exist, but more than that, just their capabilities. They simply don't have this depth of troops and resources to provide those security guarantees on their own credibly, and they, also are constrained in terms of finance.
Okay, Mark, let's see what the readout is later in the day from Riyadh in terms of those conversations between Russia and the United States of America. With that in mind, we saw a major shift, really, in the defense stocks over the past couple of days in Europe. You've got Saab, you've got Rheinmetall and Leonardo, along with BAE. I mean, Danny, this plays to the whole point of where are you going to spend the money on defense? Is it going to be domestically in Europe, or there's one kite that's flying out there, which is part of the deal, what the president wants, is that Europe spends money here in the United States of America as part of some grand bargain. If you want us to participate with you, you need to buy our defense stocks.
Rheinmetall up 50%
Huge.
year to date. And again, European stocks trading at a record despite what Mark was describing as the sea change, a break in the transatlantic alliance as we know it. There's still so much positivity being priced in, perhaps because it is more spending finally coming from the Europeans. Well, Manus, coming up on the show, Southwest announcing layoffs. It is the airline's first ever job cuts. We're going to bring you that story next.
Bloomberg Brief. I'm Manus Cranny alongside Danny Berger here in New York. Let's get you up to speed. Front page news looks a little bit like this Tuesday morning. First up, Financial Times reports that Honda is willing to resume the takeover talks with Nissan, as that's if the CEO leaves. Honda has become frustrated with the speed of Nissan's restructuring and the depth of financial troubles. It says it's willing to revive the negotiations under someone who can better manage the internal opposition.
Meanwhile, Manus, Bloomberg has this. President Trump congratulating U.S. Central Command forces for conducting a successful airstrike in Syria, targeting a senior, quote, terrorist leader. According to Central Command, the airstrike resulted in the death of a senior finance and logistics official in an al-Qaeda affiliate. The operation marked at least the fifth airstrike conducted or enabled by the Central Command against ISIS and the al-Qaeda affiliate since Trump took office.
And the New York Times leads with Southwest. They're going to cut about 15% of the workforce. It marks the first layoffs in the carrier's history. The CEO, Bob Jordan, calls it a difficult and a monumental shift. Joining us now on the story is Bloomberg's Benedict Camel. Benny, what goes through here is, I suppose, the culmination in many ways, the pressure exerted by Elliott Investment Management. They have a fleet of people on that board. Is that, or is this the culmination of that pressure?
Yes, very much so. This is, as you say, a company that has been under pressure, under siege almost, for the past year. Elliott Management really tightening the screws on the company. And we'd sort of seen some rumblings towards what we heard yesterday, the job cuts. They had already scaled back some hiring. They had frozen some hiring and so on. And then yesterday, they came out with the announcement saying that we will cut about 1,700 thereabouts jobs. These are all in sort of senior ranks, so it's not pilots, it's not support staff as such, but it's in the management layer. And the CEO saying really the cost and the hiring, they have sort of run away. They've not been able to keep track or keep pace with the business, so there's something they had to do here. But as you say, it's a bit of a watershed moment for this company that has prided itself in never having cut jobs in its 53-year existence.
Benny, while we're talking about airlines, we'd be remiss if we didn't ask you about what happened in Toronto on Monday. Really shocking pictures of a Delta regional jet landing and then flipping with icy conditions. Now, we've had a lot of these different accidents grabbing different headlines, Benny, and getting a lot of attention this year. But when we look at it, is there something more deep and structural going on? Is it something we need to be worried about, or is this something that looks more par for the course?
Well, it's certainly worrying. If you look at the pictures, as you say, they are hugely dramatic. If you see this plane landing on its roof, people, by their own account, suspended like bats, as they said, inside the cabin. Luckily, everybody escaped here. But to your point, is there a pattern? Is there something deeper that's wrong here? That's probably hard and too soon to say. We need to find out exactly what went wrong here. It seems like this particular incident, the pilot had a very hard landing that then led to this chaotic touchdown. And if we compare it to some of the other incidents that we've seen, the crash in Washington, D.C. at the Reagan airport, that was obviously, a collision mid-air, probably malcommunication, the helicopter being at the wrong altitude. If we look at the crash that we had in South Korea at the end of last year, where that plane slammed into the wall, all tragic events, for sure, all headline grabbing, but nothing that really follows a pattern as such, where you'd have to say, okay, we have a fundamental pattern here and something that we need to address. It's different to say a couple of years ago where Boeing had these two crashes in rapid succession, though that was a pattern and that led to a rethink, but that's too soon to say here.
Benny, we really appreciate your coverage. That is Bloomberg's Benedict Campbell. Coming up, U.S. stocks underperform its peers year to date. Investors flock to Europe. We're going to have more next with Clear Harbor's Aaron Kennon. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manish Cranny. Let's set your agenda.
Europe sidelined from the start as the US and Russia teams meet in Saudi Arabia on Ukraine. The cost of European defense nudges yields higher. In the US, bonds reflect on Governor Waller's calls for a pause. And in China, the embrace of the tech titans. President Xi vows to support the private sector, extending the rally. Danny, good morning.
Good morning and welcome back from a long weekend. What did you miss? Europe trading at all-time highs while European rates sell off. The U.S. rallying this morning, up about 1/3% for S&P 500 futures. NASDAQ 100 outperforms, perhaps thanks to a lift coming from China with, as you mentioned, Manis, Xi's full embrace of the private tech sector. Meanwhile, for this bond market, it is under pressure. European bonds were under pressure all day yesterday with ideas of higher defense spending and borrowing that comes with that. Your two-year yield up nearly 3 basis points. We're at 4.5%. Also, Waller, as you mentioned, Manis, saying that until it becomes clear that the inflation bump is over, rates should be on pause, which of course differs from what we heard from him last time around, which was that the inflation data was looking positive and you could get something like 3 or 4 cuts for this year.
He did warn about the risk of policy paralysis. So it's sort of like, wax on, wax off with that. If you look at those bond markets, yields have been falling for 5 weeks in a row. So the kind of twist that you've seen is a reaction function maybe to that explosion higher in bond yields that we've seen on the back of this defense cost. $3 trillion is what Bloomberg estimates the cost of defense that needs to be spent over the next 10 years by Europe defending against Russia.
It's interesting because the back and forth in this bond market, I think, is reflecting this huge uncertainty premium that's getting baked in right now. We don't know what's happening with rates. We don't know what's happening with politics. We don't know the extent of the Doge cuts. We don't know what's happening with Ukraine. But amid all of that, Manis, and you start off the show mentioning this, that the investor survey, the fund manager survey from Bank of America, having them the most bullish on risk in 15 years, even with so many unknowns.
And the cash level drops. I think the only one kind of moderately sure thing is that Scott Bessent wants to control the yield curve. It's sort of like bend it like Bessent. It's that sort of like bend it like Beckham. But it's that thing, it's that targeting of the 10 years. And what are the risk ramifications of that, Danny?
Right. Well, will he actually be able to do something like terming out the debt? Well, Manis, amid all of this bullishness, it is European stocks that look really strong. They've been outperforming their peers so far this year. The DAX, the best performing index globally. Aaron Kennon of Clear Harbor writing, quote, Europe is in chaos on multiple fronts and sentiment is low, which is most likely why capital has flowed into that market year to date. How much worse can it get? Many investors are asking. I'm pleased to say that the CEO of Clear Harbor, Aaron, joins us now. Aaron, I think this captures sentiment so well. Europe is in chaos. They're not at the table when it comes to negotiations. They have $3 trillion that they'll need to spend in order to repair Ukraine. Can the momentum in European risk last?
Well, Danny, we'll have to see. I mean, I think a lot depends on a couple of different variables. Clearly, the tariff debate and how impactful that will be on European exports. I think also, of course, what's going on in Ukraine, and to the extent that we could see an end to the war in Ukraine. May not be an equitable end to the war, but it could still raise the animal spirits among investors, among consumers around Europe, and perhaps reopen Europe in some respect from a business perspective. And then, of course, China seems to be incrementally bouncing off the bottom and rebounding when you look at their economic data. And there's a lot of optimism in the sort of post-DeepSeek announcement. And that demand could feed into export demand again for Europe going forward. And of course, the last point, feeding back to Ukraine, is defense spending and the prospect that Europe may need to be spending over $1 trillion a year in defense spending. They've been talking about $400 billion that they may be able to do uniformly around Europe going forward. So that could impact significant components of the industrial sector within Europe.
Aaron, good morning to you. Just looking at the landscape, carrying on from what you've just said, there is a view that there's a number of defensive positions that you need to try and think about taking in 2025. Gold is one of them. Defense stocks is obviously becoming another one. How defensive do you become in this world of unknowns?
I think it all goes back to, what's your mandate as it pertains to the allocation of your client capital. At a place like Clear Harbor Asset Management, we're always asking ourselves that question. And so sometimes we're taking modest tactical shifts in the market, but ultimately thinking about the asset allocation piece. And when you look at the United States, we're 25% of the global economy, but we're 75% of the MSCI All World Index. So that's a little offsides on the margin there. If you look at Europe, multiples are right at the sort of 50th percentile. In the United States, they're at 95th percentile. And the European economy is about the same size as the US. And sentiment is low and multiples are low generally across the continental European landscape. So that just sort of informs us on where we want to tilt from a valuation perspective. With that said, we're still very much core US investors. We do believe in the notion that US exceptionalism is real, but then you take a look at the US market right now, and not only is it expensive, but Mag 7 represents about a third of the entire S&P 500. And so you could have a scenario, and we expect this to actually play out this year, where earnings growth converges towards the overall S&P 500 growth rate, which is not what we saw in 2024, where Mag 7 outperformed massively from an earnings growth perspective. And so if Mag 7 names were to just sort of normalize their earnings, we could see a scenario where the S&P underperforms, but the broader S&P actually performs reasonably well.
I was going to say, Aaron, to that point, if you're worried about things being offsides, the Mag 7 have a larger combined market cap than Japan, Germany, UK, and India combined, despite just having a fraction of the earnings of those nations. Does that mean if you want to invest, you need to be something that looks more like an equal weighted index? Is that how you should be approaching this market for this year?
I think if you're an investor that's thinking about that as a factor, market cap versus equal weight, it certainly looks like there's a little more of a margin of safety around the idea of remaining equal cap weighted. Equal caps outperform market cap on the margin. If you look at Mag 7, it's only up 1% in totality year to date, whereas the S&P is up 4%. But I would actually look even further at just sort of mid-cap stock picking, large cap stock picking outside of the Mag 7, outside of the mega cap tech names. There are lots of opportunities there. The 493 stocks outside of Mag 7 are trading at like a 17 times forward multiple. And that's about half that of the Mag 7 forward multiple. And yet earnings growth for the Mag 7 will probably be about 18% this year, whereas the 493 names will probably be trading, closer to 12%. So that convergence is happening. And we just think that, yes, the margin of safety is for one to invest probably equal weight more than market cap weight going forward here. But that isn't to say that the companies like NVIDIA are not, wonderful companies that may actually be, of course, cheaper today than they were even a month or two ago in this post-DeepSeek world.
Well, the one impact on those longer duration mega tech companies is going to be where 10-year yields is. We have Scott Bessner, as Danny and I were talking about, targeting the 10-year. What's the ramifications of Bessner trying to anchor the 10-year yield on duration, longer duration assets?
It's interesting, man. It's because he's talked about that his eye is on the nominal rate rather than the Fed funds rate. but he's also sort of indicated that his funding plans will still very much be focused on the front end of the Treasury market and the Treasury bill market. I think he referred to as like the non-coupon market, which is really what Janet Yellen did. But she made a real blunder, which was, of course, we had rates, trading right around the inflation rate, and she wouldn't lock in long-term rates. Now we have 10-year Treasury rates trading 200 basis points above 10-year inflation break-evens or inflation expectations. And maybe rightly so, the Treasury Secretary is sort of thinking, well, maybe this now is not the time to lock in those rates. And so I think it's a tricky moment for him from a Treasury Secretary perspective, thinking about that part of the market. But I think as a fixed income investor and allocator, the longer end of the Treasury market does look sort of compelling within the context of owning other asset classes like equities, like gold, like alternatives. There's that margin of safety of about 200 basis points that wasn't there just a few years ago.
Okay. Bonds do what they're supposed to do, act as a defense. Aaron, thank you very much. Aaron Kennon there of Clare Harbour Asset Management. Other stories trending on your Bloomberg terminal this Tuesday morning as we come back to work. Shares of Baidu falling after a smaller than expected revenue drop. The company faces challenges in its internet search and AI businesses, including competition from social apps and startups like DeepSeek. Baidu's outlook remains challenged, with AI ventures expected to lose money for the next 3 years.
Meanwhile, BHP's profit fell 23% with decreased demand for iron ore from China's faltering economy. It also cut its dividend to 50 cents a share. That is an 8-year low, but CEO Mike Henry remains optimistic.
The sectors of the economy that are important to BHP's commodity demand, for the most part, have been performing strongly. The exception, of course, is the property sector. That has been under some pressure, but we're starting to see some green shoots there by way of increased new starts, property price rises in some sectors. So I think we'll see some momentum building into 2026.
New York Governor Kathy Hochul has raised serious questions about the future of Mayor Eric Adams. 4 top deputies have resigned. The Speaker of the City Council has called for him to step down. Hochul has called for a meeting with the key leaders to discuss the path forward. Coming up, we return to our top story. The Ukraine talks begin in Saudi with the US and Russia meeting. The story next on Bloomberg. Bloomberg Brief. I'm alongside Danny Berger here in New York. Well, the U.S. Secretary of State Marco Rubio and his Russian counterpart Sergei Lavrov have begun negotiations in Saudi Arabia today. They're discussing the roadmap for an end of the war in Ukraine. That's without representation from Europe and Ukraine. President Zelensky so far has said that he won't accept negotiations without his nation's involvement. Kate Ackley has been tracking this for Bloomberg government. Look, these negotiations have begun. A great deal of rhetoric has fallen from Zelensky and from the Europeans criticizing this. But what will be deemed to be an opening for a meeting between Trump and Putin at the end of today? What do they need to do in Riyadh to deliver that next step?
Right. Well, there could be a sort of summit with Putin and Trump as soon as, the coming days. So they'll be looking at, have they made enough strides where they, can have these two sit down and talk through this again. There's no representative today in today's talks from Ukraine, and this represents just a total pivot from what the Biden administration's sort of plan was when it came to the war in Ukraine. And we've seen just an enormous change from the Trump administration to how it's going to operate, with respect to Ukraine and Europe writ large.
Can you get more into that, Kate? The sea change that we are potentially witnessing, and it was hinted at JD Vance's speech on Friday, saying that what I worry about is the threat from within, the retreat of Europe from some of its most fundamental values shared with the United States of America. How different of an environment are we witnessing between the two nations, or the bloc of nations in America?
Yeah, I mean, I think it's hard to say how different. It's huge. It was shocking to many people in Europe, not just diplomats and people working in and, attending that meeting last week. But ordinary people living in Europe, I heard from people that their phones were just going off, watching JD Vance's remarks, really setting a very different tone for U.S. diplomacy and U.S. relations in Europe.
Okay, let's just, the question for Europe is how do they reassert themselves and reinsert themselves into this? But can we pivot to Washington? Another weekend of email communication. Bloomberg sources have revealed that Elon Musk's government efficiency team is trying to access a broad range of taxpayer data. Now, this is particularly contentious. What's the legality around this?
Yeah, and, you've seen people call on Congress to really step in here and say, wait a second, even if you're a Republican, are you okay with this? Your constituents' information, is this, should Congress allow that? I saw there were actually demonstrators yesterday, the President's Day holiday, gathering around Capitol Hill, calling on members of Congress to speak out about this. Now, this is obviously, Washington, D.C. is obviously a very Democratic, District of Columbia, and the nearby surrounding states, the suburbs of Maryland and Virginia, also very Democratic. But still, it was a show of, calling on Congress. Now, this week, the House of Representatives is not in session, but the Senate is. They'll be dealing with nominations to the Trump cabinet and other administration nominees. But I think that's what you're seeing, the pressure trying to be put on Congress to say, wait a second, is this okay?
By the way, 9 p.m. Eastern tonight, there will be an interview airing between Musk and Trump, sitting down together, being interviewed by Fox, again, speaking to the continued relationship between the two and some of the power that's been bestowed on Musk and Doge. Kate, thank you so much for joining us. As always, Kate Ackley from Bloomberg Government. Okay, turning to tech now. Shares of Intel, they are rising in the pre-market after a really strong week last week. The Wall Street Journal reporting that TSMC and Broadcom are thinking about potential deals that would break the U.S. chip-making giant into two. Joining us for more is Bloomberg Intelligence tech analyst Matt Bloxham. Matt, some real enthusiasm around Intel, but just the context, we should keep in mind it lost nearly 60% of its value last year. Is something changing for the chip giant? Is there animal spirits in the water for Intel?
Yeah, I think so. I mean, this has been coming for some time, and our own journalists reported some interest in TSMC not so long back. As you said, Intel's been in a really difficult spot for quite some time. They, having been the leader in chips for such a long time, really kind of blindsided by the kind of AI revolution. So I think the CEOs stepped down. They've got interim CEOs, so there's a huge amount of change going on at Intel. And I think this breakup plan of perhaps having the kind of chip manufacturing separate from the kind of chip design would fit with how the broader industry works. I guess one of the big questions, though, is going to be TSMC's involvement and how comfortable the Trump administration will be with a foreign company controlling what's essentially seen as a strategic asset for the US. So I think, it's possible that TSMC could have a strong role to play given their expertise in the most advanced chips, but it'll most likely, I think, be alongside some US companies. So there'll probably be some kind of joint venture or consortium that goes after the chip manufacturing business with TSMC.
And this plays to a much broader geopolitical issue, isn't it? We've got Xi Jinping wrapping his arms again around big tech, and specifically Jack Ma, along with other leaders. This is very much a demonstration of positioning by Xi as we go into these tariff wars and building that tech industry up again.
Yeah, absolutely. And I guess, given the US or the Trump administration's shift towards making things about the US, China's making it about China, and you're going to have lots of investment in technology going on in both countries. And so that's what's really critical about the evolution of Intel here, is that kind of reducing the US's reliance on foreign companies, particularly ones within the purview of China, for their key technology. And, big businesses like Apple and NVIDIA that really reliant on TSMC for their manufacturing. So, yeah, kind of big developments going on in both continents right now.
There's no signs, though, that in the U.S. you're having any slowdown of spending on AI, that the DeepSeek, the worst that what has been feared, hasn't really made its way to the companies themselves. Perhaps it's too early, but you also have Elon Musk releasing a new AI model. What does the competition now look like, Matt, with the idea that China is forcefully and fully back in this race with the backing of its government?
Yeah, I mean, it feels like the AI universe is still in its expansionary phase. It's difficult to see these, hundreds of billions of dollars of investment continuing for too many years. And I think inevitably at some point there will be some shakeout of the big AI players. And I think given what we've seen so far, you could definitely see it kind of split along national lines. We've seen DeepSeek integrated into WeChat. I can't imagine there's going to be too many US tech companies that integrate DeepSeek into their technology. It's going to be either their own or a kind of US counterpart. And I think that there are probably too many AI models out there right now for them all to succeed, given that there's big question marks about how you monetize this technology. So I would think inevitably, given what we've seen in previous technology cycles, there'll be some consolidation, also much clearer winners and losers in the next 2 or 3 years.
At the very least, when it filters down to us, at least we may have a broad platter to choose from where to spend our money on AI as the consumer. Matt, thank you very much. Matt Bloxham there, tracking the tech stories. Coming up, we'll set up the agenda for the rest of the week. We've got Fed Minutes, we've got a G20 Ministers Summit. Context matters every day on Bloomberg.
Welcome back to your Bloomberg Brief. Danny Berger and Manus Cranny here in New York. Let's get you set up for this holiday shortened trading week. We're going to get Fedspeak coming later today, both daily and bar. And then we're going to get the latest Fed minutes. That comes on Wednesday. G20 foreign ministers, they will be meeting in South Africa on Thursday. We also have some more earnings throughout the week. Alibaba and Walmart reporting on Thursday. And Manus, in terms of what else could move markets, there'll also be an interview between Trump and Musk airing on Fox tonight.
Yeah, we'll certainly cover those headlines in the morning. One stock that we're tracking in the news flow is Delta. The shares fall after the jet flips upside down after landing in Toronto. 15 people were injured in the incident, but everybody made it out of that plane. Dell Technologies up 1 1/8, continuing the rally, which spiked on Friday's report that it's nearing a $5 billion AI server deal with Elon Musk, XAI. And then Constellation Brands extending their gains after Berkshire Hathaway reported a new position in Corona and Modelo maker on Friday, up 8.21%. That's a position and a half. Danny.
Man, it's just a quick check on the bond market as we head to the end of the hour. They are under pressure. Is it the tail that is wagging the dog? European bonds selling off yesterday. We're up about 3 basis points on your U.S. 10-year yield because there's one thing that seems certain, Manus, more defense spending in Europe and more government borrowing.
I mean, that's essentially what spooked this market. The reality check, if the Europeans want to reassert themselves and reinsert themselves into serious negotiations over Ukraine, it means you're going to have to show us the money, show us the defense, stand up and spend more. That's the message that's coming through.
Yeah, and we had an EU minister speaking with Bloomberg saying that maybe we'd finally get joint bond issuance. Okay, that's it for your brief. Surveillance takes the reins from here.